Hello everyone and welcome to today's major markets update. I hope you all had a great weekend. It is Monday, June 27. Let's review the smaller wave count to see if we are still on track for a possible 5 waves higher and what that means for the bigger picture. First, I wanted to share with you the Dow Jones, kind of a little bit of all you can do is anticipate, monitor and adjust story on Elliott Wave. And here is the Dow Jones hourly chart. Every candle is 1 hour. And this is what I was originally tracking since the April high here that we had 1, 2, 3, and then a 4 and a 5. Question mark 4, potentially question mark 5 down here. And a break below the low here made in May would then target as low as this downside target zone. Also said we are in the symmetry box, and if we get above that symmetry box, we would then move higher. So how did this resolve itself? Again, all you do is anticipate, you monitor, and you adjust. You can only know what you know based on the price data that is available to you. And then we got this rally into June, which was completely sold off into mid-June. So what this means is when we then adjust the wave count, anticipate, monitor, adjust, is that we have a wave A, a wave B, and a wave C, where C equaled A. So instead of a 1, 2, 3, we had an A, B, C. And remember, it's all ABCs. Everything is ABCs, which in its very nature eventually will turn into a correction, okay? Be it a super cycle 4 correction or a major 4 correction. There is nothing impulsive on this entire move. Then again, we have a 3-wave move. Okay, so the B wave is always 3 waves, A, B, C. Let this be a lesson in Elliott Wave and how variable corrections can be. Where you think you have a 1, 2, 3, 4, 5 setup, it eventually morphs into a ABC, ABC setup. This is the unfortunate nature of corrections. If you don't understand this, then I have no answer for you regarding Elliott Wave. This is the unfortunate nature of large corrections. So all we need to do is anticipate, monitor, adjust, and use our if-then scenarios. If we go below this price level, then this scenario is operable. Excuse me. So we have the A wave, the B wave. This always bugged me as 3 waves lower, correct? B waves are always 3 waves. And then here, wave C of B as a irregular, the B wave is irregular, expanded flat B wave. Again, B waves are always 3 waves, so they can be a flat, a triangle, or a zigzag. Once the B wave starts, you never know which one it's going to be. I prefer the zigzag because it's super simple. But most of the time, the market does something very tricky. And then we had 5 waves lower into the mid-June low. And now I am tracking a potential new impulse higher. We have wave 1 here, wave 2 here, and now subdividing higher. So far, we've just tagged exactly for the Dow Jones, the ideal wave 3/C target zone. Ideally, we drop back to about 3,100 or 31,000, 31,200 for a wave 4 and then a wave 5. That is also exemplified here, 3, 4, and 5. Unfortunately, on the Dow Jones stock charts doesn't allow me to fill in question mark 4, question mark 5. Why is it question mark 4 and 5? Because I do not know yet if it's going to be 4 and 5 or if it's only going to be 3. Once we start breaking below key downside levels that need to hold, we know it's only again 3 waves higher and we continue to subdivide lower. That is then again the unfortunate nature of a correction, but again we have our beautiful if-then scenarios. So wave 4 should ideally bottom here and wave 5 should ideally top here. And the market reserves the right, of course, to not follow exact ideal patterns, but we do want to see, as I said before, an ideal 1, 2, 3, 4, 5 setup. Same for the Dow Jones, 1, 2, 3, 4, 5. How the exact microwaves themselves fill in is fine. I want to see this larger pattern. You can also clearly see that on the daily chart where we had a 1, a 2. 2 is this downside day here. 3 and a 4, which is the downside day today. And fourth waves can become more complex, so it doesn't just have to be one day. And then another one wave higher. Again, please note this potential wedge pattern that is forming. Once we break out, the wedge will get retraced to its beginning, ideally, which is at around 4,600, just as we did in this smaller wedge pattern that formed in January through March. And then we got a 3-week bounce. Remember, every bear market has at the minimum a multi-month bounce. We haven't had one. If we have topped, we have now declined for 6 consecutive months. For the technology sector, already 8 consecutive months. So we need to see at least a multi-month bounce. 2 to 3 months would not surprise me if we are in a corrective big supercycle 4. And that bounce can easily bring us back to the breakdown target zone here of about 4,600 for this potential wedge. I say potential because it hasn't been confirmed. Once we start breaking out, it has been confirmed. I like this classic overthrow here, which is kind of classic for a wedge where you break down and then whips back inside of it. So now we have to watch for this potential breakout. Remember the 2 paths that we follow, 4 and 5. As I said here, for this wave 5 to happen, we must break and stay above 32.50. And we're holding that level so far. That is the bullish cutoff. And rally above 41.75. We haven't even done that yet. Followed by 4,700. We haven't even done that yet. So this remains on the chart. You can see we have a lot of upside before we can conclude wave 5 is on its way. Alternatively, as I've shown over the last few days, we only get a B wave bounce to about, I would say, 4,400 plus or minus 200. And then we succumb to new selling pressure. That will then be wave C of cycle A. After cycle A, we get cycle B. After cycle B, we get cycle C. And I expect cycle B to become an irregular cycle B that will target a new all-time high. As I've showed you before, using over 100 years of data, that pretty much all flat corrections on different time degrees or different wave degrees have been irregular expanded flats in the indexes. So again, to recap, please remember this is what we were looking for based on the price data available. Due to the corrective price action, it morphed into something completely different than I anticipated here, because we were looking for 1, 2, 3, 4, 5. That didn't happen. Welcome to corrections. They can morph continuously into another set of ABCs. That is the real tricky part, but we have our clear if-then scenarios. Bottom line is this all looks corrective. Everything on pretty much every time frame except for the C waves are corrective, because C waves are internally made up of 5 waves. This green C here was a nice subdividing wave 5. And in this C wave was also a nice subdividing wave 5 or 5 waves. But this was all ABCs, yuck, yuck, yuck. Tells me this is all corrective. Longer term or intermediate term, it's fine. Now we're looking for the markets to hold essentially last week's big rally on Friday. Those lows pretty much need to hold. That gap here should hold, and then we can fill in a 4-5 setup. Today, nothing new can be really said. That is simply the same as I said on Friday. Same here for the NASDAQ 100. We also have this potentially massive wedge. Note how price failed so far to break above the wedge. I really want to see that happen. If we then can clear about 12,900, we can potentially target 15,300. Again, that is the start of this wedge pattern. We're not there yet. Quick look at market breadth. Reasonably okay. It is dropping so far today. I'm sure this number gets updated later today. Lower readings, I like it, but we need to see below 50 also on the NASDAQ. So it's going the right way, but not really there yet. Then the PMO buy-sell indicator, it gave a buy signal on Friday. That's a good signal, so let's see what today brings. I don't have the data yet, but that also supports higher prices. So this one is now a buy. That is good. That also supports higher prices. Buy signals, never bad. Previous buy signals, as you can see, lasted several days. So expect this one also to last several days. So far, we've only had one candle, so we need many more candles to the upside. Lastly, I'm tracking a potential swipe breadth thrust event. On June 16 or 17, depending on how exactly you define the swipe breadth thrust, we had a reading at or below 0.4. Now this breadth number needs to break above 0.615 within 10 trading days, which is either this Friday, July the 1st, or Monday, 4th of July. Well, actually, it will be then, of course, the 5th, because the markets will be closed on 4th of July. Currently, this indicator is, I believe, let's see here, doesn't want to update. Let's do a quick one here, back and forth. Oops. Sometimes stock charts can be a real pain in the you know what. It is currently at 0.548. So it's getting close, and we have a few days left to get us back above 0.615. If we get above 0.615, then we have a breadth thrust event. That is very supportive of a multi-month rally. We don't have to have a breadth thrust event. The market can rally without it, but it really would be additional weight of the evidence that a multi-month rally, be it either major 5 or primary B, is underway. Again, B waves will be very tricky. Even this larger B wave can become a irregular expanded flat, just as we had this B wave here, just as we had this B wave here. So don't think this B wave will just be straight up if it is a B wave. There will be numerous amounts of twists and turns with this potential for it to be irregular, where the B wave of the B wave goes below the start of the B wave. Okay, so please keep that in mind. As I showed you for Tesla on Friday, how insanely complex fourth waves can be, where you have a flat within a flat within a flat, and even the B wave of that flat is a flat. So please keep that in mind. This can be total mind, pardon my French, fuckaroo for the next months. It can really be it. I hope not, but please be forewarned. All right, forewarned is forearmed. Prepare for the worst, right? Hope for the best. The worst is all these flats. So I really want to make clear that if this is a larger primary or super cycle 4 wave, and we're in a primary B wave of that super cycle 4 wave, it can be total utter confusion. Cluster F, you know what. So please, I just want to make sure that, again, the predictability of market corrections is much lower than impulse patterns, because in market corrections, especially large ones, after an ABC, we can tag on another ABC and another ABC. It can go on ad infinitum if it wants to, till it's finally done. For now, that's great. It's dandy, water under the bridge, just to make sure that you understand the market environment we're in. And that's why I highly recommend my trading alert service, because it couldn't care less about the Elliott Wave. It just follows the trend, and it will keep losses small and try to capture profits as soon as possible, considering it is in a downtrend, the markets. Okay, so if you can't trade this, then don't blame the Elliott Wave. There's another opportunity for you, and that is my trading alert service. You don't use it, you lose it, so to say. That's on you, not on me. Anyway, tracking for a 4 and a 5. That's ideal. I have no further information. We go above today's high. Could be a smaller degree, third and fourth wave we're currently in. So we need to give it a couple more days to really get us a nice 1, 2, 3, 4, 5, potentially question mark 4, question mark 5, question mark 4, question mark 5. Don't know yet. We know the levels we need to hold, which is about 38.25, etc., which is these target zones. They need to hold. We break below these lower target zones, chances are we only did 3 waves higher. So please keep that in mind. These target zones need to hold. They don't, chances are we're going to move lower. We get continually subdividing ABCs lower to the downside. With that, thank you so much for listening. Thank you so much for being a valued premium member. I want to keep my updates to only about 15 minutes, short, sweet, and simple. Watch those boxes, watch those target zones. We need to stay in those for further upside, we start breaking below them, chances are we won't see any further upside. So they're on the charts are there, hard to miss. Take care, trade safe, see you all on Wednesday. Bye.